The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And our stock of the day is Lovisa. Today's AGM update containing three key metrics: comparable sales, total sales and net new stores, all three below market expectations. Global comparable sales for the first 20 weeks of FY25 were up just 1%, with total sales up 10%, but behind consensus expectations. And the jewellery brand continuing its international expansion with 27 new stores opened in the financial year to date. This represents 19 additional since it last updated in August. And taking a look at the stock today, bit of a bounce there, but of course, Daniel, this has been a market darling, but the past year maybe not so.
Yeah, look, not that the trading update really surprised anyone. That's why, despite the miss, you've actually seen the stock turn positive. I think since the departure of Victor Herrera, it really has been a story of perhaps moderating growth, going a little bit slower, maintaining margin, and looking more at profitable growth, which I think the incoming CEO, that's what his incentives are more aligned to, like maintaining margin, growing EBIT at a steady rate, rather than this massive store rollout, despite the fact that they still have growth within them. It just might take longer to come. A few other talking points, I assume, at the AGM, and certainly amongst sell-side analysts, has been rising competition, particularly in Australia as well. So there are a few talking points at the moment with Lovisa. That's why you've seen, in particular, the multiple D rate, but it still does trade a significant premium to its peers. We think that has been justified given the growth, given the quality of the business and its management historically. But now, the market's going to have to decide, what is the right price to pay for Lovisa. The growth is slowing, therefore the multiple should be lower. Do you pay 30 times forward, 20 times forward? Its peers are trading on that 15 to 20 times, so it is roughly double the multiple. It's just going to be figuring out this battle between growth expectations and what price to pay. But we still think the bigger picture here is the longer term with this business. So happy to hold it. It's still probably our highest quality favourite stock in the sector, but certainly think that in the short term there can be some variation in expectations given everything you've said there, Andrew.
Yeah, in fact, I was just taking a look at a couple of the broker responses this morning off the back of that. City saying trading update weaker than expected, citing that slowdown, particularly new store rollouts and like-for-like sales. Bell Potter adjusting its target price down 6% to $31. We are at around $26.50 at the moment. Henry, what did you think?
Well, I guess, Andrew, it's interesting to see how it's rallied off its low. It got down to $25.30, so it's $2 off that low. So that is good. I mean, Brett Blundy's a pretty good operator, let's face it. It was a little bit disappointing, a little bit underwhelming, and maybe it has become a bit of a second half story or a bit of a 2025 story in terms of the growth and rolling out those stores. But they're in 49 countries, and I guess if they really wanted to run hard, they could. It's not a difficult store to fit out, is it? It's probably location driven to some extent. But, if they wanted to run hard, they probably could. But I guess there's a little bit of caution there. There's a new CEO. We've got that transition coming in. And we probably won't see too much clarity, I guess, in how things are really going till we kick off the new year. So I do like Lovisa, I've got to say. I think it's one of those stocks that I wouldn't say is immune to economic times. I mean, it's the whole lipstick thing. But their customer base is not really the ones that are out there paying mortgages and have got big student debt. They tend to be a somewhat younger cohort, shall we say, and their margins are extraordinary, and it is cheap and cheerful jewellery that satisfies the new generation. So I don't have a problem with it, but obviously the market a little bit underwhelmed. If you've got it, you wouldn't be selling it. If you're new to it, I think you could probably wait a little bit and see how things turn out. They're not going to rush away in a big $30 spurt, but at $27.40, it's probably not a bad time to have a little bit of a nibble here, but they can be volatile.
That is our stock of the day, Lovisa.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.